Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello trader friends, checking in on the market. So after hours, Amazon with a huge beat, Tesla yesterday, Amazon today, trying to make the market forget about the virus. We had a WHO conference today that added a whole bunch of volatility into the markets. The bulls responded bullish to it, and this is now adding a surge after hours as SPY is up over $1 into the close. So Amazon, which was a laggard to a lot of the tech sector names in a long monthly tightening range, has a rocket ship to new all-time highs right now, trading about $40 above the previous all-time high. So congrats to the bulls. I personally don't play earnings as they are too much of a gamble. Could easily go the other way. Nice to feel FOMO, easy to feel FOMO when this happens and you say, oh, I should have bought, I could have bought, I was thinking of buying this and I didn't do it. When in the end, again, a lot of it is a gamble, and it's much easier to make that gamble when you're playing with house money. If you're up a certain amount of money on the day and you want to risk that money on a lotto call, then by all means go for it. But in terms of a long-term strategy, not ideal looking to play earnings without a ton of fundamental, if you're putting dozens of hours into fundamental research, absolutely play earnings. If you're not, you're kidding yourself to think you have an edge. So looking at SPY, 4-hour equilibrium. We knew to be looking for a higher low this morning with weakness. We had a clear support level to go off of. So this is how we can play and set up trades and risk to reward scenarios within an equilibrium, when we know an equilibrium is the most likely scenario. So let's say SPXL was our horse, as that is the 3 times leveraged bull. And let's say on the pullback this morning, you decided first thing, you're going to start scaling in. Gap down open, you're going to scale in and use 66.15, that low, as your stop. The open was at 67.17. Let's say you made a first order at the open. 67.17. I always like to scale in because I never anticipate I'm going to nail the bottom. So I make an initial entry at 67.17, let's say, and then I would make maybe one more at 66 something. If it filled, it would have been a great fill. If not, if it didn't get low enough to fill, put my stop under 66.15, and obviously the risk to reward is much better now. Even if you bought 68 and 67, your average is 67.50, you're risking, I would put my stop under 66 even, you're risking $1.50, and at this point, you're looking at $2.50 to the upside, and this move may not be done just yet. So that's how you can establish a clear support level. You're anticipating the most likely scenario is a higher low, and then making a play off of that. I didn't trade today, so I did not make that play, but congrats to anybody that did. So after hours, we are breaking our key resistance in the short term of, let's go back to SPY, 328.63. I want to see that level break during regular trading hours. If we pulled back and we're unable to break that tomorrow after the bell rings, I would consider that a double top. The odds favor a bull break is more likely because of the strength after hours. And with that bull break, it gives us a 4-hour trend change. And what is our next resistance? Very limited, pretty much the all-time high, 332.53 and 332.95. The burden of proof remains on the bears to derail these market bulls. The virus got some nice headlines. No, the virus is not done. It's still out there, and we still have to be paying attention to it. But again, price action is more important than the headlines. So the bulls are in complete control as long as these 4-hour higher lows can now hold. And again, I want to see that break during regular trading hours. IWM is a 4-hour lower high and unable to break resistance. We broke support by about 50 cents, and anything under 165.56 is a lower high. IWM does not have nearly as significant an impact in the broader market as does the tech sector, the financial sector, the healthcare sector. So it's worth paying attention to, but the fact that we broke bearish by a bit in itself is not enough for me to be bearish to the market. I have to see the weakness in the tech and the financial sector. So here is QQQ, heavily tech weighted. There is our bull break. 222.93 is that level. We're very likely to break that level tomorrow in regular trading. And just like that, 226, all-time high, is right there. Currently about $1.20 away from the all-time high. Less than that. That quick for the bulls to take it back. Financial sector, bull break. So the two most important sectors for me have both broken their 4-hour time frame. I want to see both break during regular trading hours, but again, that's the most likely scenario. So we zoom out for XLF. After this bull break, we're looking up at 30.79. How about that gap down for dip buying? Huge green day from the low to the high. And at this point, again, the 4-hour time frame can be our guide because we've been using it. Or if you want to zoom in and use the hourly time frame, that can be our guide for short-term levels as well. The healthcare sector is weak, so we want to be paying attention to this. The healthcare sector and the financial sector are roughly the same weight in the S&P 500. We did break support here as well, but not a ton of follow-through, less than 0.5%, just about 0.5%. So we can call that a double bottom, give the bulls a little bit of wiggle room just because of how we're seeing the other sectors respond. But I'm going to want to see 102.64 break here sometime in the next week or so for all engines to be going forward as far as the market is concerned. And there's that resistance 102.64. Anything under that is a daily lower high. Still looking for a weekly higher low to form. And we will have to be cautious of a head and shoulders here. If we were to bounce, fail to break the high, and then roll over, that's longer picture. Not going to be worried about that at this point in time. And that's where we stand on the market. Biotech sector, one more. 4-hour equilibrium still in play. If we cannot break 92.25, we'll be looking for a 4-hour lower high to remain in this tightening equilibrium, likely into next week. Let's look at the VIX. And the VIX is going to be responding with even more downside. From here, high, low, we knew to be looking for the lower high, and we're likely going to be breaking 1490 tomorrow. We'll see, but we would assume that's more likely. And if that takes place, we're then looking down at the next level of 1260. So that's where we stand in the market as a whole. Bulls have to prove it once the bell rings. They are proving it after hours. Amazon fueling bulls higher. Overall, a pretty beneficial earnings season for the market. That's that. Dollar starting to pull back, just looking for a daily higher low to form. Gold had a good start to the day. Here's the reaction to the morning strength and the WHO reaction to the press conference about the virus, and then the strength of the market at the end of the day, and we're dumping. So back to the daily time frame, exponential support is in play. High, we can look at really the last 12-hour, or the 12-hour chart is a tightening range now. High, low, lower, high. And if we drop down and break this 1563 level, we will be in a 12-hour downtrend, and we will zoom out to the 3-day chart for the equilibrium. Our lower high will be set if 1563 breaks. Silver definitely caught up against gold today, but it is still a lower high, anything under 1836. And again, if we just want to see a comparison of how they are to each other, XAU, XAG is the chart. Pullback day today, still in a daily uptrend, however. Have to lose the daily uptrend if silver is going to start significantly gaining against gold. Bull miners. So our daily higher low is set because we did get follow through the high of yesterday today. Is our lower high already being set? We need more information. So if we break the low of today tomorrow, 3168 is still holding after hours, but it's in play. If that level breaks, our lower high will very quickly be set. And from there, a break of 3056 would be a clear bear break, which means look for dust to be making a clear bull break, and look for gold to be pulling back into a 3-day equilibrium. Oil. Bear flag on the daily confirmed, but no notable bear follow through. We broke that support by 49 cents. Pretty decent bear break. But whenever you see a break with a lack of follow through, it means start keeping an eye in the other direction. We do need a break of 54.35 for a clear bull break. Right now it's just bulls playing defense. They have to go on offense. We'll keep an eye out to see if we get a setup looking for an inverse head and shoulders. If we fail 54.35, we'll then look for a 4-hour higher low and then a trend change attempt. And again, that's the kind of setup I like for risk to reward, entering on that higher low, because my stop level's right there. And I know that if I am wrong, we will break 51.66 and I'll stop out on that break. But again, looking to scale in. If we get a little bit more upside, scale in a couple orders, looking for the higher low with a stop below the low that we have to hold. Just another rough example of risk to reward and having clear levels to be going off of short term. Natural gas. So there's our bear break. We drew that pattern yesterday. Bear break through support in reaction to the inventory report. Zooming out to the daily chart, no support except for 179. Bears still in complete control. Every bounce is a lower high on the 4-hour time frame. You can't get much more clear than that, and you can't get much more confident for the bears. High, lower high, lower high, lower high. All about 179 in the short term, key support. So I appreciate you watching. A little bit more clarity in the short term now with the bulls getting this win. Again, I need that win to follow through until the bell rings tomorrow to break those resistances. But burden of proof remains on the bears. Dip buying remains good to go for the bulls. We'll see how long that keeps up. As long as we're in a weekly uptrend, I'm looking for any fear to be dip buying scenarios. As long as we're in a monthly uptrend, I consider us in a bull market. But if we lose the weekly uptrend, we can still be in the monthly uptrend, but I'm going to be way more cautious as a bull. Weekly uptrend, let's look at SPY. Knowing that we're $1 higher right now than this chart's going to show, that's a healthy weekly chart. No red flags whatsoever. A little bit of a bear attack on Tesla at the end of the day. We were setting up to look for our standard gap up open to new all-time highs. Look at this bear attack at the end of the day after getting close to a real strong close, less than 1% from all-time highs. It looked to me like a bit of a bear attack to do everything that they could to prevent a gap up open to all-time highs tomorrow, because we know those gap ups just continually put huge pressure on the bears. So that'll be interesting tomorrow morning to see where we shape up relative to 650.88, the all-time high during regular hours, and then the high of extended hours, 659.80, would then be behind it. Live Q&A, free Sunday, 10 a.m. Eastern. Join me on YouTube. Ask me questions. Would love to interact with you. Have a good day.